welcome back to the RationalInvestor.com Broiler Chicken Show. Trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello again, everyone. Welcome back to the Frivolity. This is our weekend show. Actually, I'm just looking out of the corner of my eye. Look at the preview. I have it on that screen up there if you're wondering what I'm looking at. There's the camera. There you are. Anyway, welcome back to the Broiler Chicken Show. This is our fun Sunday adventure. Talk markets, talk trading. Hopefully answer questions. I don't know whether there are any questions. I haven't actually looked at the AMA document yet. And also, too, we should probably keep an eye out for when Shartoshi and Grim and Peter all have suggested that level 1 class is done, and hopefully they come piling in. And we'll speak a little bit to that audience today. Like I said, the original purpose of this show was to do a bit of a follow-up for the level 1ers. Actually, I think over the summer, I'm going to try really hard to maybe create like a not really crash course, but kind of like a condensed version of the basic sort of introduction to investing, how to build a small business of trading. I kind of like that idea. Team's been kicking it around. And especially, 2023 is a consolidation year. I don't think anybody should be thinking they're going to get stinking rich in crypto this year. But if we get all our ducks lined up and everybody firing on all cylinders heading into the end of the year and attack 2024 in earnest, I think 2024, 2025, and the very beginning of 2026 should be a good time in the market. Unfortunately, crypto to a certain degree, it was the story of the previous fear cycle that I, of course, teach in our education program. Anti-US dollar, anti-establishment, anti-growth, bury your head in the sand, all that kind of stuff. Sadly, the people that run our society, they completely diluted the crap out of our currencies, which of course created this, inflationary environment if you believe the government statistics. If you live in reality, I think this is borderline hyperinflation. So we're coming out of that cycle now, though. And actually, this, it makes sense, right? The Great Reset and the Klaus and all that crap. Once we sort of get our feet established, what does this new world look like? I do believe that the Federal Reserve Board down in the United States, the sort of representative, the face of the 1% bankster elites of our society, they are sort of re-exerting their authority over our society at present. And then once that's done, they feel like, all right, we've washed out all the marginal players. We have control of the system again. Then they'll start encouraging growth. And I wouldn't even be surprised, like right now, for example, crypto, it's kind of on the outs a little bit. There are some sort of left-leaning U.S. politicians that are calling for like the outright ban of crypto and all that kind of stuff. But frankly speaking, in this deficit-driven world, I teach everybody in the education program, we live in a world now that must grow, whether it's growing through inflating the economy by just printing money, or whether it's actual natural growth rate, people actually going out and actually, money multiplier, building a business, establishing revenue streams, establishing profit margins, and growing. Regardless, this world has to grow. There's no choice about it whatsoever. So soon if that growth prospect ever falls off, then the whole damn house of cards collapses. So sadly, what that means is if we ever go into one of these sort of sickness kind of scenarios, and they have to shut everything down, i.e., no more growth, then that means you're probably going to get a big whack of hyperinflation as the money printers start going crazy. And if I understand correctly, historians, this is a good opportunity for you to go back and review. I think it's a good idea, everybody. If you want to play this game and you want to understand how this game works, you should all be, and most of you are. Actually, here, and I'm sure we have the link in the library. But the easy way to find it is just this Money Masters. And if anything, it's kind of good that at least we do have this at our fingertips. I mean, this poor gentleman, he spent basically his entire adult life just basically fighting the powers that be. Like, he made this video back in 1996. Do you think anybody in the higher ups actually listens to him? Probably not. They probably hear his message and they're like, okay, we got to dumb this guy down as much as possible. But anyway, the point of the matter here is I don't think you're doing yourselves any favors by pretending that our society is fair, by pretending that, if you just work hard, you'll get ahead, by pretending that there aren't nefarious actors and players in this human species that actually undermine the public's best interest. I think it's super important everybody understand that. I mean, this is the reality. So anyway, I do believe that we're coming out the backside of this. The only problem is like I said, if you're a student of history, which of course I love to espouse myself as, I believe that look at that, you can already see I've done this search a few times. I believe that Klaus, number one, Klaus isn't really that smart. He just knows history. So it's not like he's like predicting the future. What he's really doing is just saying, well, there's these cycles, and every 80, 90 years, we got to go and quote unquote hit the reset button and sort of redefine what money is and what the value of money is. That's half the reason why people are involved in Bitcoin to begin with, right? So, and interestingly enough, I believe that Bitcoin was created. And, why is it you don't hear anybody say boo about Bitcoin? Even that Elizabeth Warren in the US Senate, right? She's all up in arms about Ethereum's gas fees, but she's not talking anything about Bitcoin. So I believe Bitcoin has basically been deemed bulletproof by the US government because I believe it was actually established by US government types. Anyway, the point here is our last great reset was 1940s. And what's bothersome, of course, you can see how the inflation data in the early 1940s got going pretty heavily. Then things calmed down. And I think this is the window that we're sort of, if we're not in it, we are approaching this window where you should see, in fact, you might even argue like July 2023, you could almost basically plug in 2023 instead of 1943, and you can see how the inflation numbers started to fall, and they basically trended lower for, I'll call it the better part of a year or two. Looks like we ultimately got back to zero right around 1944. And then this is the bothersome part, as you notice at the very end of the decade. You thought that inflation surge that we just went through was bad? Oh boy, you ain't seen nothing yet. So we all have to prepare ourselves. And, like my buddy over there, Stoned Ape, I hope all of you learn now, if you go and make a whole pile of money in crypto, for God's sakes, get it out of the market. Don't, and whatever you do, do not get sucked into this, well, 11,000 APY, but I have to lock it in for the next 3 years stuff, because you're just asking for trouble. And I think every cycle, the noobs all get sucked into this, absolutely absurd API kind of, or annual percentage return, APR nonsense. And you have to lock things in, though, which means that basically if the whole damn thing blows up, you're screwed. It all goes to zero. I remember, and I don't mean to pick on you in particular, Mr. Ape, but if I remember correctly, quite a few people that I was talking to last summer when I was in Europe, they had said they got kind of sucked into, Do Kwon and his Luna and SBF and that FTX place, and Celsius, and I suppose, for God's sakes, the amateurs at the top of the market are going to tell you, um, you know when something doubles in price, don't sell half and get yourself a risk-free position and take your original capital and put it back in the bank so you know that it's there. Go and buy more. And that is the hallmark of an amateur at this game. And I guarantee you, I absolutely guarantee you, we will be back in that environment. I guarantee you it's going to happen. But what you have to understand, very few people do, is that these things move in big circles. And so just, like, I don't think 23 is really that great of a year. There's going to be some fun little stories, like AI, of course, is a fun little story. And if you can hop on some of the meme names and stuff, people got to keep busy. I suppose guys like, well, I won't name names, but there are crypto influencers that they're sitting there bored to death. They throwing like 10 Bitcoin at something to pump the price up is nothing to them. They're sitting on like thousands of Bitcoin. So let's go and, screw around with price of this little meme coin. And then of course, as soon as everybody's saying, oh yeah, I got to pile into this thing, and that's when of course they pull the trigger and they get out. Anyway. So there are always going to be those, and there should be some of that fun through this summer, especially the AI names. It appears AI is pretty hot in the market, so we should see that. But just understand that there should be another really nasty, nasty wave of this, and this is going to be hyperinflationary as we come out the backside of this decade. In fact, we have a couple people that are like astrological gurus on this site. I'm thinking of one person in particular, and he told us like 5 years ago, oh man, we don't want to be around this place in 2027 through 2030. It's going to be just an absolute poop show. So just be aware of that, people. Anyway, we do. This is an initiative that I've tried to spearhead here over the past month or so. I would like to try and make it so that this video offering on the weekends has a little bit of structure to it. And there's also sort of like a regular path that we follow. Of course, it's very difficult for Brian to stay on topic. If anything, I have Chris here. Chris is a total boss, and thank you very much for being in my life, Chris. Basically, categorizing, chapterizing. I don't even know what it's called. The YouTube video, and also too, we've sort of tried to work with the AI machine. I don't even know what you call it, but theoretically, you can get AI to help you sort of summarize these videos. And Chris is diligently working away on that. And Rares, if you're watching, I sent you a message. We have to figure out what we're going to do with you. We do have a couple jobs that still need doing. But hopefully we can have the robots take over all this sort of itemizing, categorizing, all that kind of stuff. But anyway, the point being that somebody had said even last week, it's going to take me a while to get into a rhythm here with this and get it so that it's actually fluid and I'm within the proper time constraints. We started the video at 10:45 my time. Of course, I like to be on the road by around 1 o'clock my time, which means that this video really shouldn't be more than a good couple hours. If anything, I wouldn't mind trying to be done by, like, say, 12:45. But the first hour, and if anything, Chris, maybe you could just make reference that first 10, 15 minutes was a bit of an intro. And yeah, so Chris, in 1 minute, is supposed to chime in here and say, "Keep moving forward, you lazy bum. Get off your ass. Okay, keep going," or something like that. Anyway, so put this document together. You can get this in your email. And then that way, if you do happen to miss a Broiler Chicken Show and you look at it and go, "Oh, Jesus, 2.5 hours." You can, just in your email, click this link here, and I don't even know what's going to pull up now. I guess hey, look at that. That's the current video. So anyway, you can watch it after the fact. And this should summarize basically everything that we've sort of seen happen in the past week. What is our proprietary signaling system telling us? I've had a few people suggest to me that I should probably try and refrain from barking about individual signals on a regular basis. And this thing is getting good enough now that it's probably worth the price of the subscription. So I'm just diluting that value by mentioning on a daily basis. I will talk a little bit about it on these weekly shows. And of course, if we have any trades of note, I can definitely talk a little bit about that. But first things first, just starting right out of the gate, what I would like to do is just sort of like follow the path along here. I don't know whether this is the correct order to do this, but like I said, it's a bit of a learning experience, so I'm just going through this. So before we get the video going, I like to just sort of digest the information that the breadth indicator model is telling us, put together what I figure are some of the noteworthy events that happened over this past week, along with specific econs. Then talk a little bit about what the commodity trend survey is sort of telling us, anything significant. Any markets or trades of note that really jumped out at me. Of course, this is a trade that I put on about a month or so ago now, actually maybe even a couple months. But I think it is indicative of where we are in this move. And we'll talk a little bit about, what I think is going to happen here. And of course, I like to, on a regular basis, produce every Sunday morning a summary of the weekly chart, the daily chart, and then the 4-hour chart of Bitcoin. So put it all together, should be about an hour, but as I've sort of said, every once in a while I'm going to get off on a tangent that loses 10 minutes of time. I think they're valuable rants, but I do know that it's a little bit tough for the public to follow along my logic here. Half of the reason why I do like doing these shows and stuff is I like to just, we're all students of the market, keep learning, keep getting better, keep refining. And I do like the fact that we built these tools that I think help us out immensely in the market. And I don't really want to talk about current signals. I'll talk about them maybe on the Monday, Tuesday, Wednesday after party shows. If you are interested, we'd love to have you part of the TRI community. So start off, just a couple sort of overall comments. What's the theme of this past week? And this past week, clearly we saw the stock market move up appreciably. You find it interesting that our breadth indicator here did turn back up on the ES and the S&P 500. That whenever I say ES is the symbol for the S&P 500 futures. But the S&P 500, this is a pretty good sort of index benchmark to use to gauge the overall sort of health of the stock market. It's the biggest 500 companies on the New York Stock Exchange. And you can see the very noticeable W, also two W's through 50 lines. You can see on Friday the data print, very, very strong market reaction following I think it was the May, I think it was May. The May jobs report out of the States. I think there were three real drivers here for the very strong reaction out of the stock market. And just give you an idea of what it sort of looked like in trading. Here is I like to follow this 4-hour chart. I actually think we're coming into trade levels, but at the same time too, we all know the shenanigans around options expiry. So, the 1% really screws around with the market, and they hit an absolute home run with this past week's options expiry. What was interesting in the stock market, I had previously posted some kind of questionable megaphone patterns. Like I kind of did one off of here and then went there and then said, all right, well, 1, 2, 3. The only problem with that is you kind of missed a couple points here, Brian. So that was a little bit sloppy. It was good to see the public sort of said, well, Brian, I think you probably need to clean that chart up. If we actually do the textbook megaphone, right, you go off of the high of the cycle. So, oh, gee whiz, look where we are now. So I don't know whether, the problem with calling megaphone early is you've kind of shot your credibility wide. So I'm sure a lot of people are like, yeah, you cried megaphone too many times. That cry wolf kind of guy. What I would say here is we do have a couple harmonic AB equals CD. These are called PRZs, this level way up here, potential reversal zone. And we also had a littler one, ABCD, which took us up. So this is a pretty interesting level. Like you can see, I had a whole bunch of reasons to justify hunting shorts. And on Friday, unfortunately, I did take a shot. Actually, I took a shot through the euro close. It was a really nice trade setup. But through the broadcast on Friday and stuff, eventually, after about an hour and a half, the market just did not want to break down, and it went up and stopped me out. Then I did have another trade set up off of actually this ABCD. These are alt ABCD levels way up top here. And that actually did work out quite nicely. And then they just rolled the market over into the close. But absolute home run when it comes to derivatives options expiry for the higher ups. So stock market, all the Wall Street people, they went off to the Hamptons. Hookers and blow on them, I suppose. I don't know what a Hamptons hooker looks like, though. So probably they have caviar and blow. I don't know. Anyway, so the reasons, and usually what happens in the stock market is, like I said there a moment ago, a lot of what you see in the stock market happens because people have vested interest in markets being at certain places. And I even said here, right? Close above 420, right? And this was sort of the magic level, this 420. Could they get it above here? If you look at the put open interest, there's 420s up here, and there is, I think, 422. And there's like no open interest above here at all, none whatsoever. So on Friday, they had it here. But if they close the market on Friday here, you'd see all these put options would expire in the money, which means that Wall Street's got to pay them out. So lo and behold, you see that on Friday, I mean, it's just absolutely shocking what they did. I don't know whether I can show you this or not. I don't know how to zoom in on. So 422. Here's our open interest. You can see 422, there was 1,800 contracts. Then above 422, look at the numbers. I mean, that's embarrassing. This is like blatant. I mean, to be perfectly honest with you, if you actually know what you're looking for, this is borderline criminal because that you can't explain why the market did what it did in the way that this open interest is without you saying that, hey, somebody obviously had a vested interest to make sure this damn market closed up top here. And look how many options they had to pay out on. I mean, nothing. And look at all these tens of thousands of contracts, just strike after strike after strike, all expired worthless. I mean, just shocking how they do this. Anyway, so and I like to sort of frame Fridays based on this data. It's consistent how they're doing this over and over and over. So, did the market move up because of nefarious Wall Street operators? Or did the market move up because, oh, wow, the economy is booming and everything's rocking and rolling and, stock prices should be higher? There's kind of a weird sort of mixed bag of econs here. They always say that what's good for Wall Street isn't always good for Main Street, and what's good for Main Street isn't always good for Wall Street. So here's a situation where theoretically, you've heard Chair Powell say that, hey, I want to inflict a bit more pain into your lives. We got to slow things down. We got to cool things off. And the economy, the print is, hey, the economy added more jobs than expected. What? Wait a minute. And keep in mind that these monthly employment report data sets are stunningly manipulated and always subject to massive revisions over time. So you don't even know whether this is even a believable number, which is kind of a shame. The way that they're kind of spinning this is it's kind of an odd situation. You had actually the unemployment rate actually tick up because a lot of people that were previously employed, and maybe the sickness and all that nonsense, they fell out of the labor pool. Then recently they're kind of like, well, you know what? I guess we better get back to work because money isn't free anymore. So they rejoin the labor pool, and as a result, if there aren't a whole bunch new jobs, like there's more people added to the labor pool than the amount of jobs created, then the unemployment rate ticks up. They're very, very messy. I'd also say, too, I did find it interesting that we have almost no news coming out this coming week now. So it's going to be interesting to see what the Fed does. And one of the reasons I think that the market enjoyed a bit of a rally there, as we said, is, first off, stock market has a strong jobs report. So that is a reiteration that the North American economy and the US economy in particular is actually very strong internally right now. Question is, do we have a lot of wage pressure and wage inflation? We also had the resolution to this debt ceiling issue, which was kind of a made up issue. Might have been like one of the reasons why, well, I don't know how you say this. I think that the Republicans, and here's the problem is that they are just as bad as the Democrats. It's not really like one's like, oh, these guys are totally awesome and those guys suck. And we all know, let's see if anybody's listening, how can we tell when a politician is lying to you? So, the Republicans were directly responsible for just ridiculous tax breaks through the Trump years, through the Bush years, and interestingly enough, through the Obama years, they didn't instate any of those taxes back. And here through Biden, they're not really reinstating any of those taxes. So, you have a situation where the government theoretically is running bigger deficits. Well, they're running the bigger deficits because for some reason somebody just decided that, hey, we don't have to pay taxes anymore. And of course, remember, this is all geared towards the 1%. This has nothing to do with you and I. We still have to pay taxes out the fucking ass. And in my country, it's embarrassing how they rape the 99%. But anyway, we all know that, of course, everything in our society is geared towards the 1%. And none of them are paying any taxes. In fact, Trump himself has said repeatedly, look at, I don't pay any federal taxes because that's the law. You can't fault me for just following the law. He's a real estate developer, and real estate developers, if you have a real estate development business, you can buy property and you can depreciate the property. And if anything, it makes a lot of sense why you see, and actually thinking back, this is a really good history lesson for all of you. Do you guys remember, like, through the sickness, stupidity, inner cities that had these quote unquote special economic zones, where, of course, the real estate is highly depressed? Theoretically, the 1% is incentivized to go and buy that real estate so that they can reinvigorate it. Mysteriously, we had a whole bunch of riots and just absolute chaos all around these zones. Now, why would that happen? And I think the answer is because the 1% goes and buys these properties in these economically disadvantaged zones, whatever the hell you want to call it, and they are incentivized to have those real estate values actually go down so that they can write off capital depreciation. They can write off the value of those investments, and that way they don't have to pay a single penny in any federal income tax. So, yeah. Thank you, sir. So I hope you guys, I hope I've explained that, but clearly. But I was quite shocked when I started to put sort of two and two together. Mr. Trump, of course, has said publicly, and what's really interesting is, what was her Hillary Clinton? Is she still alive? God, I hope she doesn't fucking run for president again. Anyway, she was trying to call out Trump about, hey, you haven't paid any federal taxes, and he's like, well, guess what, sweetie? None of your big donors pay any taxes either. They're in the same damn business I am, and we're all just following the law. So, what's actually the cause, the root cause of these deficits? What's the root cause of this, horrific inflation? Well, I might argue to a certain degree, the 1% is just not paying their fair share. And as a result, governments have these ridiculously huge deficits. The only way to deal with them is, of course, the Federal Reserve, the banksters, the people that represent the 1%. They just go brrr and print up all this money, hyperinflate the society, and we start the whole game all over again just by adding a zero onto the end of everybody's bills. So I'm not going to say that the right wing is better than the left wing. They're both just as culpable in all of this, and it's really tragic. It's sort of like it's everybody's trying to out to screw the system and take advantage as much as they can, and they don't realize that you're actually just playing the game exactly the way the banksters want you to play it. And, Rothschild was famous saying, I don't really care whether you have a leftist, bleeding heart liberal government or you have some fascist dictator, military Nazi type government. My job as a bankster is to encourage them to spend more money than they bring in, creating deficit, debt. Once you're in debt and I control the money supply, I control the rules. I control the game. And I think that's exactly the society that we live in. And it doesn't really matter whether you're a right wing or a left wing politician, they all play the same game. So, anyway, there's your backdrop. So, the point here is what a surprise. It turns out that the Republicans did acquiesce, and there is going to be a higher debt approved. And the whole sort of Fakese, emperor's new clothes kind of idea, it just keeps going on. Not I don't think it should have surprised anybody. If anything, it would have been a really good thing had we finally ripped the Band-Aid off and sent this whole society into just some horrific tailspin, hit the reset button in the sort of fiscally responsible way, and then our country has a future that's not basically dominated by financial slavery to the 1%. But that's not the case. So this financial slavery goes on. And if anything, all of you that are participating in the Bitcoin story, you go, woohoo! $1 million on Bitcoin now. The sad thing is, it's going to cost you $500 for a loaf of bread. So the key here is you have to outrun the inflation. We know when the inflation is coming, right? You know it's coming. Like I said, the banksters have full control of the system. Klaus and all of his jerks are all doing their great reset. You know when the next big financial inflationary push is coming. We also know that crypto, of course, is a great leading indicator, and it should go zooming up through this window here when, actually we threaten to go into deflation to a certain degree. And then the Fed comes out and says, oh, well, we've got to encourage growth. We've got to encourage growth. Start cutting interest rates and all that kind of fun talk. And risk assets will go absolutely crazy. As we've told you repeatedly at TRI, that's basically that the start of that is this year, right? And that's where's our blog? Again, I've told you repeatedly, this is, in my opinion, this blog is way better than any Wall Street research. Way, way better. Josh has really outdone himself with this research. So we all know that 2023 is your accumulation year. So you have to sort of like be front running these guys. And you have to understand, of course, we've shown you this repeatedly, that Bitcoin, like I said, I think it was built by the CIA and by George Bush and all those cronies as their way to offset what the banksters are doing. I think they all know what the banksters are doing. You can't stop the banksters. They control the society. You can't do it politically. You just saw what happened with the Republicans, politics wise, just isn't going to work. Can't go and just crank up taxes, which is, what really should have happened was they should have never done the tax break with Trump. Why they did that, I have no freaking clue. And they should have never done the second tax break under Bush. There was a huge tax break that they did under Bush Jr. that the market never needed. And I even remember Warren Buffett coming out and saying, now, why on earth would I pay a lower tax rate? I'm a billionaire, by the way. I don't need the money. Why would I pay a lower tax rate than my secretary? My secretary that literally fills up my coffee and photostats all my documents. Talk about 20th century references. I suppose woke secretaries don't do that anymore now, though, do they? Anyway, the secretary pays a higher tax rate than Warren Buffett. So, and that was all because of George Bush Jr. And of course, you don't hear anybody talking about that anymore. Just totally secondary conversation. Anyway, point of the matter here is that we are right in that troughing window. And we need to, if we're smart, we know that about 6 months prior to the next halving event, that is when Bitcoin likes to bottom. And we need to get ready for this next orgy of orgies in the crypto space. I think it's an excellent leading indicator. We know that ultimately, when all of this price inflation is priced into the market, it'll be a zero-sum gain. But what we should see happen here is you should see, where the hell did it go? You should see that Bitcoin and the stock market and the altcoin market, especially sort of anything that's sort of AI related, they should all go absolutely crazy here ahead of as soon as this inflation data starts roaring back, once we get into this phase, and it's interesting because basically we're calling for November 2025, and really sort of early January, February 2026. This is where the next crypto cycle peak should come in. And then notice, look how, we hit sort of a trough here, and this is almost like a W, right? Because we went like 0, then we went all the way up to, I guess, what, 2.2 and a quarter, we'll call it. There's 2.8 right there. Then we backed off to like 1.69. And then all of a sudden you can see March and April of 2026, boom, big old W comes in on the inflation number. And then it's just like an absolute train wreck following that. Look at these numbers. They just get absolutely insane. So if anything, what I'm thinking here is that crypto does its typical thing. It's a great leading indicator, and it should move up, along with the stock market. If you actually look at the way that the TradingView keeps changing the damn buttons here. I think it's this one. Yeah. So, and actually, this probably isn't the best place to show you, but let's see. Do I have daily chart? Yeah, no, it's not very good. Well, you know what? We don't have enough time to get into that today. Okay, let's get back to the newsletter. Sorry. Okay, so the point of the matter here is politics. Big surprise. Same old business as business. Business as usual. Strong econs. What's fascinating about this past week is somebody sort of let slip out of the Fed that maybe they might even consider skipping this coming Fed rate increase window here in June. I don't know. I mean, I guess the point here is, Mr. Williams. I don't know whether you ever watched Larry Williams. He's basically been saying that as soon as he sees anecdotal evidence that the Fed is ahead of this inflation curve here in the short term, he expects the stock market to take off. So we're going to do this. There we go. My way that I like to follow what short-term interest rates are going to do is I like this study, the Fed spread. It's interesting to see that the corporate interest rate market actually ticked back up, and the Fed funds futures actually ticked down a bit, which actually brought this spread back in. Now, did the corporate interest rate market tick up because the data coming out showed that employment numbers are strong, but the inflationary push is not that strong? Where are we here? Boom. No. Boom. All right. Here. Let's see. Does that look blurry to you guys? I don't know. Does that looks kind of blurry, eh? How do I move this over? That's weird. How do I get you to go over? No. Isn't that bizarre? Anyway, I wanted to move this over, but I don't know how you move that over. What a mess. Is there? Yeah, I can't see it. That's it there? No. Oh, there we go. All right, good. Okay, thank you. Appreciate that. So what were some of the data points that came out this past week? Interestingly enough, not a lot of big US data. The ISM manufacturing PMI actually came in weaker than expected. So that sort of speaks to Powell wanting to slow the economy down. The unemployment rate, like we said, actually ticked up. Non-farm payrolls, huge beat though. Then you have to ask yourself, is this going to be subject to revisions? So I know there's a lot of people that don't like to trade non-farm payrolls because it is so unreliable. You can see a lot of other sort of US big drivers. Interesting how we had Canadian growth came in quite a bit stronger than expected. So that sort of speaks to this kind of data as well. North America seems to be humming along here nicely. Job openings actually ticked up. So there are more jobs available. I suppose maybe that helps the sort of calming the inflation fears. Did hear a lot of talk over this week that the Chinese sort of rebound is pretty darn muted. And a lot of people that were hoping that China would come storming back here, they're just not seeing it. One thing that I did see this past week, which did catch my attention, was India is humming along. They're really enjoying kind of China dropping the ball to a certain degree. But the Indian story is pretty strong. And I'll tell you here, just in the lower mainland, I don't know whether it's something that's a fairly long established trend, but for the longest period, like they called Vancouver Hongcouver, just because there's so many Chinese here. And then, of course, you watch my tweets and rants and stuff about all the sort of, crony capitalism that goes on here. Vancouver is a terrible place for money laundering. And it's weird. It's like the people that are in charge, as long as the money laundering helps bid prices up and the locals who own real estate and own land, as long as they're benefiting from it, you don't hear a boo about it. But as soon as it's detrimental to the economy, you're going to start to hear locals here bark pretty loudly. But we're in this hyperinflationary property market here. I mean, you've watched previous videos of mine. I mean, it's quite remarkable how unaffordable housing is for Canadians in this country, which is kind of weird. It's like, okay, well, whose country is this? It's not Canadians. Yeah. Geez, man, just blabbing away here, eh? I don't know whether I helped you guys here today or not, but anyway, thank you, sir. So the econs, fairly strong for North America, but at the same time, too, I guess the inflationary pressures that we were sort of worried about, kind of abating. There's German inflation data that came in a lot softer than expected. I suppose Northern Europeans probably going to see the inflation number come down. The Southern Europeans, I don't know. And actually, interesting is France sort of caught right in the middle. Of course, they have lots of socialist programs, I guess, but at the same time too, they're a bit austere. But it is interesting to see how like countries like Italy, now that inflation ain't moving an inch. So it is interesting to see the whole Eurozone. You can see that inflation is ticking down. So that's probably got the bond guys a little bit happier there. So the point I guess we're trying to make here with all of this was the talk coming out of the week. And actually on Friday, we had 1075. I think that's his name. I'm not positive. Anyway, he did a great presentation in our after party show. On Fridays, we like to have site members and OGs and stuff come in and talk to the crew. So he did a great job. Anyway, he mentioned repeatedly that he kept hearing the Fedsters talking about skipping this upcoming rate hike. I think they said that they've like raised rates like 10 times in a row. And maybe they could take a month off. I suppose the ultimate question here is, and Druckenmiller said this a couple of years ago, that you won't actually hear the Feds talk about stopping raising interest rates until you actually see those interest rates above the inflation rate. So we do have that now. The interesting thing is that this is still in the face of a very, very strong economy. And I think that's one of the reasons why the stock market was just booming there. Right? I hate to say it. Anybody who follows the breadth, that's a big fat W. We might see some give back here in the short term, but there isn't a heck of a lot of news to drive price over this coming week. So it'd be interesting to see how this plays out. Like trades of note. Let's see if I can move this back over. This was a trade that I did put on a couple months ago, and I might argue that it's way too late to be a buyer here. Way, way, way too late. The question ultimately is, where do you want to think about starting to take profits? Do you want to take profits up in reload zones? And if anything, if we do get rallies up top here, this actually now starts to represent shorting areas. Do you take some profits at these A, B, C, D, and 50% levels and gaps? But I could very easily see over the next week or so, especially if the market feels as though the Fed's not going to be raising rates, I could easily see this move up some more here. And, we saw very, very bullish readings out of, I don't know whether this will show it or not, but we'll see if we can do here. This particular ETF, yeah. Actually, the whole market came back quite smartly. You can see the NASDAQ was up and actually just sort of sat there up for a better part of the day. The Dow actually started off weak, but then came screaming back. So put it all together, market started off relatively weak, but then came screaming back. Well, Effie was doing his presentation. We had like the tech stocks up here, all very, very bullish. And in particular, I think that this particular asset that we bought, at least I bought a while ago. This is the you can't. Is it? I need glasses, or is this blurry? I can't read that. I don't know whether you guys can read that or not. Oh, that's the farthest I can zoom in. Well, anyway, that's a shame. Anyway, this is the communication sector ETF. We're gonna have to figure out a way that people can actually read this, Chris, going forward. Anyway, it's a work in progress, right? You can't really read these numbers either. So we'll have to figure out what to do about that. So, tech stocks, I think, are in sort of the sweet spot of the market. And actually, it was kind of scary. I didn't include it in here because all of a sudden, mysteriously, the news release was taken back. But there was talk late last week that an artificial intelligence drone or an artificial intelligence driven drone was given orders by humans to call off its attack. This was a U.S. military, and it disobeyed the orders, and it actually turned around and it started attacking the command center that gave it the orders to return to base. Later on, somebody came out and said, no, that was all wrong. That was all wrong. We're going to change the story. I don't know whether it was right, and it just was received really poorly by the public. So the military had to quickly backtrack and cover up the story, or whether this gentleman that reported the news was feeding the fire of uncertainty over artificial intelligence. But no doubt about it, right now, artificial intelligence is all the rage in the marketplace. So it doesn't surprise me that the communication services, you saw NVIDIA and some of the semiconductor names, I suppose, in that space going crazy. Tech related or crypto related names in that space. So the headline for this week, I think, is this past week saw the market move up appreciably on a strong May jobs report, a resolution to the U.S. debt ceiling uncertainty, and hence the U.S. Fed may skip this coming June meetings previously planned short-term interest rate increase. That's sort of the talking heads want a reason why the market moved up. I personally think they moved the market up because of the options expiry, but that's just me, tinfoil hat guy. Was interesting. A particular note this past week, tech stocks continued to surge on the positive developments within the AI space. It's getting a little dangerous. Like I said, that was an interesting article out of the US military about their artificial intelligence programs. Skynet is coming alive. And it's fascinating to watch. Like, there's some people in the sort of YouTube space that are all military buffs and they all like this. And then when I heard them reading this story, they all took a bit of a pause and went, oh boy, this is scary. So the sad part about it is Skynet is basically coming, folks. There will become a point, probably in the not too distant future, where artificial intelligence will look at humans as an inconvenience and a obstacle to whatever it deems is the appropriate response, which is pretty scary. But I've suggested is, try and take advantage of this rally in this space. I've talked to you at length here, even today, about the crypto market. There are a lot of AI generated crypto proxies out there. So definitely, in fact, even I heard somebody was going to do a big ICO airdrop, whatever the hell you want to call it, of a crypto AI play. I don't know whether, I don't remember exactly who it was. I think it was Julian who brought it to our attention. He was going to try and grab some of it. I don't know whether he got any of it or not. So let's all go make a pile of money out of this, okay? But we better get our tropical islands bought, and you better get your sailboats and be able to just kiss this Western civilization goodbye one day in the not too distant future, because I don't like the writing on the walls here, folks. Oh God, so scary. Anyway, there's TBG. TBG is going to go down and secure a whole bunch of real estate down in El Salvador for us, right? Well, is he still here? Oh, now he's gone. Well, maybe he's here. Anyway, I wouldn't mind getting a little acre lot or something down there right by the beach, just as a little place to escape if the robots do actually take over. Oh, goodness. Anyway, point of the matter here is, until the robots do take over, well, AI is all awesome, right? Blah, 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 whatever. One thing I did notice out of crypto, though, is this past week, there was, especially on the weekend here, there was talk of a hack within the space, this atomic wallet. And I actually was watching, it looked like when we get to the price charts and the analysis of Bitcoin, you'll understand what I mean. It looked like the price of Bitcoin was moving up nicely. Things were rocking and rolling. And then all of a sudden, this news of this hack came out. And, you never know. Could AI now actually be engineering these hacks? It wouldn't surprise me. Probably somebody, builds the AI and then says, okay, can you go out and examine all these cryptocurrencies and identify all of the vulnerabilities? And if I understand correctly, almost every single one of these cryptocurrencies has some sort of vulnerability. When that Luna nonsense was going on, I remember distinctly there were guys on crypto Twitter that were saying, there's a lot of exploits that you could take advantage of to just destroy this thing if you wanted to. Then all of a sudden, mysteriously, poof, So it'll be, and also too, it'll be interesting to see whether it be AI or whether it be Joey Diamond, whether it be Goldman Sachs. These people want you, of course, to sell your crypto at the bottom of the market. We're basically at the bottom. So are they going to try and instill as much fear and uncertainty, FUD, right, into you to get you to panic sell? And of course, get the public to go, oh yeah, all crypto is a fraud, all crypto is a scam, right? It's all a joke. So that you sell at the bottom. And then, of course, mysteriously, as we go into our very normal, what's our rule? 6 months prior to the halving event. Oh, by the way, site member wants me to start taking this. So, anyway, this image right here, 6 months prior to the halving event, we should look for a base. And then, of course, we get ready for the next bull market. So, Joey wants you to dump all of your crypto, dump everything, right? Let's see if we can engineer as much FUD as possible through the latter part of this 2023 to get you to panic sell. So there's your backdrop for this past week. I don't know whether I did a good job. Maybe just bear with me. As I said, I'm working on this new sort of format. So I don't know whether I did a good job on this or not this week, but anyway, there it is. So as a good analogy of market bottoms, and there's a ton of these tech stocks that have been moving up, but this was a pretty good example. I don't think this is the start of a new bull. And sadly, of course, the public is going to be coming in and buying. They're going to be buying into A, B, C, D harmonic objectives. They're going to be buying at the 50% level. They're going to be buying at gap fills. This could be a head and shoulders, which means that we probably could jump up into here. You can see there's a fog and bomb just above us here. And the public, of course, like I said, they're going to be coming in and they're going to be coming in and buying up top here. But I don't think it would be a good idea to be a buyer up here. You can see exactly where I bought. W's is everything that I teach you in the education programs. Really pretty Wyckoff check of the W. And of course, that created a really pretty head and shoulders. And up we go. But coming in and chasing up top here, I think it's kind of like a coin toss. Market could rally up top here. Great, you win. Market could dump all the way back down here into recent support. And it's basically like a one-to-one risk reward. I don't like to take trades that are one-to-one risk reward. I want to see it. Yep. All right. Okay, so hopefully that gives you an idea, sort of the backdrop of the market. Was interesting to see that the crypto breadth actually broke down last week after getting up into an overbought condition. So I did find that a bit interesting. So we do have the S&P, or the stock market, pointing one direction, crypto pointing another direction. That in itself is sometimes cause for pause. I don't know whether I'd really want to hunt new short trades on crypto until I actually see the S&P 500 also roll over. There are a couple, and I guess we'll get into this now. There are a couple sort of short setups working on crypto right now. So if you happen to be in them, I don't think it's a good idea to tinker with any of that. But this kind of message actually, I think, works well when we go through this. So on to the Bitcoin analysis here. First and foremost, weekly chart, and I think it's a good idea that everybody who fancies themselves a technician, everybody who fancies themselves a trader, you should have like a market of your preference, and you should, at least on a weekly basis, do this sort of higher time frame start of my analysis and work my way down just to give me an idea of where we are, given all the various different sort of participants in the market. So always start at the highest time frame, weekly chart. Hopefully you can see the W down here. This was our buy. You remember, hopefully, back at the end of 2022, beginning of 2023, I said, do you have your skirt together? Everybody remembers that. Because get ready, we were going to rally. And we did. I mean, basically, price doubled. And there were a lot of altcoins that did really, really well. And I don't actually see that ending now. This is not the time of year for markets to stop whatever inertia they have. This is more the time of year where different participants are going to be sort of entering and exiting the market. So, the guys that bought like venture cap and stuff at the beginning of the calendar year, they're going to be paying themselves a little bit. And then, hopefully sell halves on doubles, establishing risk-free trades. And they've got those trades for whatever the hell happens the rest of the year, which is just, that's smart investing, right? That's the kind of stuff that I try and teach you at TRI. Do not listen to people who say when the price of an asset doubles, you buy more. That is really bad money management advice. I'm not saying sell everything when this thing doubles. And then once the double has happened, you don't have to sell anything more. But it's just good money management principles to when your asset doubles. Maybe it's I sell a third on a triple. I don't care. I will say that I see this happen quite often where assets do actually double in price and then all of a sudden the asset rally just stops. Why does that happen? Well, it's because quite often new sellers have entered the market. Also, too, there's a old sort of Wall Street cliche: you buy when it snows, i.e., we're getting ready for the new calendar year, new venture capital money coming into the market. People are doing tax loss selling into the end of the previous year on previous losers to offset any gains they realized anywhere else. So it sets up a really, really good window to accumulate. And your tell as to where we are in this cycle is if you see the market rallying into the end of the year, that is your warning that this cycle is about done. And you just go back. You want a nice little fun assignment? Go back in the years past. What has Bitcoin done when it's rallying into the end of the year? And it's very strong into the end of the year. That's usually the end of the cycle. So the fact that we're dumping and selling off into the end of the year, and then, of course, well, gee whiz, what a big fat W there. We start to rally. This is actually very business as usual when it comes to the capitalist game. This is just the way the game is played. And so, they transition. There were venture capitalists that came in here, Wall Street types, traders, right? Going to buy when it snows. They often pay themselves for their hard work in through the latter part of spring. And the old cliche is sell in May and walk away. Doesn't mean the market can move higher. In fact, quite often it does go higher. And, calling this top and saying the market will top on exactly that date, I don't think that's in anybody's best interest. You shouldn't get into the business of predicting. What you should have done is said, look, I've got some names I'm interested in. Let's go and buy some near the end of the year. I don't know. We're going to use the W to frame the risk. Okay, fine, whatever. 3 unrelated reasons, but momentum divergence, obviously trade location, price structure, go. Whatever you got to do is what you got to do. That's your trading plan. But then once we get into the spring and you've seen a pretty nice rally, you got to force yourself to ring the register a little bit. So, it's kind of funny in crypto. It's Brian's birthday, so crypto's probably going to dump. It's cliche how ridiculous it is. But actually, we found out that it's not my birthday, it's Chris's birthday. That's the reason why crypto dumps. But anyway, the point being that, yeah, what a big surprise. But Brian's birthday, market's soft. We banged into a couple moving averages, which are in essence like a brick wall of support. I might even argue that this market actually has done nothing here for now, like 2 or 3 months. The scary part about that is that this is what it usually takes to actually end the bullish push. Is it takes like this is like think of this as accumulation. So down here, public is selling, 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 selling. And this price goes along and then puts in a W. Well, somebody must have been buying through that. This is the accumulation phase. Think like Wyckoff check. Actually, that's this gentleman right here, Mr. Wyckoff. So usually the smart money buys down markets. That's just what they do. Public, which is sadly us, most of the public, if you're not very smart, they end up actually buying up markets, right? The three arrows doofuses, that kind of stuff. The lunatics. Remember the lunatics? Everybody should remember that for the rest of your lives. Anyway, point of the matter here is when assets are down like this, actually, that's when you want to force yourself to step in and buy. It's very difficult, don't get me wrong. So prices have gone up. I kind of think that we did like one of these kind of things. Maybe it might have just been this, and we're just going to roll over quick and then have our nice little summer rally. I'm not quite sure, but I think we're in one of these kind of tipping phases here. Usually, I have found, this is just personal experience, that Bitcoin usually rolls over into the last 2 weeks of June, first week of July. And then that first week of July is the July 4th US holiday weekend. And through that week, the whole broader risk market, whether it be NASDAQ, whether it be, Russell 2000, whether it be crypto, whether it be altcoins, they all seem to roll over and turn back up around that end of June, beginning of July. Also, too, there is tax loss selling driven event in the Southern Hemisphere. Like I know Australia, for example, they have their tax loss selling in through June here. So there is reason for people to actually ring the register here and do some business here through the end of June. So with that said, we just started June, and I might even argue that if we do have some sort of dump here, you can see how 30 SMA lines up with 50% of this entire range. And then also too, candle body lows for trade location. Wicks and tails like to get eaten. That's a nice big tail right there. I like a nice little stab down into this level, into that end of June, beginning of July window. And then we get ready for our very normal seasonal rally in crypto once we get into the summer. So that's what I'm looking for. We haven't broken in earnest yet, but you can see up, down, up, fail. We do actually have an M working there on the weekly charts. And then we have a lower highs and lower lows, lower highs and lower lows. So this is the closing high, lower closing high, lower closing high, closing low, lower closing low. Well, what are we going to do now? I don't know. So that's sort of my general thought. Kind of sideways for the past 12 weeks with a bit of a push to the downside through a very normal seasonal window. Now, the market can do any old damn thing it wants, and we have technically cleaned up a lot of this sort of divergence that we had on the charts. If anything, what I'm a little worried about is if we actually look at the price chart itself. Let's go here and then here. I was a little bit concerned when I look at the momentum on the weekly chart. Don't really like this, right? Willie actually technically did go stupidly overbought there right on May 1st. What a surprise. Also, too, you can see that RSI has the first M that comes in. What are we supposed to think if we see the first M come in? Notice its color is teal. Who can tell me? What are we supposed to think if we see the first M that comes in on RSI? Do I want to wait for an answer? Chris, do you know the answer to this? TBG. Hey, Chris here's twice. That's interesting. Any of you over on YouTube? Nice, Cheryl. Very good. Good, Nori. Good, Adam. Excellent. Good job. So that was our warning sign that, hey, it's not necessarily a short, but it is, whoa, slow down, Nelly. So we should all be cautious here. Now, the interesting thing is this could very easily put in a W. And if it does, then hey, we're right back in business. It will be the first W after an M. So that means that the bears have to cool their jets. So we'd have to get that W to fire. Then another W comes in, and then that would be yellow. Of course, this is all blue, but that would be yellow, and that would be an actual buy signal. But so on a weekly basis, we just had Willie stupidly overbought. We have an M in RSI. So put it all together. I mean, you got no business buying. And frankly speaking, I don't think, I mean, just look at the price chart. Frankly speaking, look at the price chart. The price chart says itself. I mean, when you saw that M come in, that was here. Should we have been buying? No, just cool your jets. So Willie's a little bit stupid here. That's a little bothersome. And then also, too, look at on the weekly basis. Where the hell did the buyers go? They're starting to back away here, and you don't like to see that. If we get a bar lower than this bar here, 7,899, and it's a green bar, then it means officially the bulls have fallen asleep. And I think the bull rally's done. You can also see OBV is potentially emming out here on a weekly basis. That's not a good sign. So if this really is a bull, we got to see some buyers step up here for Pete's sake. Where the hell are the buyers? You know, if anything, that's this chart. So I pointed out on social media and stuff that we got these moving averages holding the market in like a boss. This is remarkable. But MACD on the total market cap, oh, train wreck. MACD on Bitcoin, train wreck. Willie actually got stupidly over. Oh, actually, no, we never did get stupid. That's good. But nonetheless, M's coming in. A little bit of even of a, no div. So just M's coming in. But Willie, I think, did get stupid over here, didn't he? Isn't that weird? All right, thanks, sir. And RSI kind of emming out here. I suppose the good thing is we don't really have massive divergences. But then also, too, notice where are the buyers? We need the buyers to come back. Buyers come back. Ooh. So weekly chart looking a little tough here. It's certainly not bullish. It isn't quite turned bearish. I think that bearish signal, the outright bearish signal comes in if this actually fires and we get that second M comes in, then we know we got a bit of trouble. Hasn't come in yet, though. So that's good. And we've got two moving averages here holding us up. And they've done an incredible job here recently holding us in. So the weekly chart, just sort of the summary is 12-week consolidation continues with little movement in price. I think that's pretty accurate. MAs continue to support, and with few FA drivers at the moment. Remember, I had even said there are like no econs coming out this coming week down in the States. I can't really see us breaking down here. We're going to have to get some sort of fundamental push. Now, the interesting thing is, like we said, we got FOMC coming up on the 14th. And we have a few crypto drivers coming up here heading into that event. Like, if I'm not mistaken, I think the SEC is finally going to come out and drop their bombshells, especially with regard to Cripple on the 10th. So there's the FOMC. There's the Cripple event. I don't think that the Cripple, I mean, I'm not going to get into the predicting what's going to happen. Cripple's pointing up right now. So I think that they are, maybe it's a buy the rumor kind of idea, and then it's a sell the news on the other side of that. But we're going to have to get some fundamental news here to push this thing one way or the other. And I don't think there's anything that's going to change here for the next week or so. If you're lucky, all right, this next week, especially into this event, if you're really lucky, we might get some altcoins, especially the meme coins and stuff, that might give you like 10x's because we're in this bit of a vacuum. And, like I said, social media influencers, They want to take advantage of the vacuum and ramp prices up in certain assets to make some money. Sure, why not? You want to see a fun one that we're in? I swear, this is so hilarious. I mean, I don't even like to say the name of it. It's just too rude. But what the hell, man? Show me a new high and I'll show you a buy. Look at this crazy ass thing. Look at that pop. This is a weekly chart. Like, look what it did through the week here. I mean, just up and down like a horse drawers. So that's the kind of environment that we're in. And actually, a bunch of TRIers got another double off here. So way to go, all you TRIers. There's that cripple that I was talking about, right? It's still catching a bid. So as long as this thing's painting higher highs and higher lows, I don't know what the momentum on this looks like though. That's kind of weird. I'm not sure why I don't have any indicators. There we go. Let's see what we got. So we'll go like daily chart. Yeah, no divs yet. So I don't see any breakdown just yet. You can even see volume impetus. If we do a bar less than whatever the lowest bar is here, it looks like that's a pretty low bar. That is 97 million coins. Goodness, that's a light day. Wow. Then you know that the bulls have fallen asleep, right? One high, two highs, three highs. But what have we done today? Done 164, so no sell signal today. And geez, it looks to me like they want to take a serious run at these old highs here, right? Also, too, we came back and tested the original bottom here and held. So that means we can do some chaos theory. Yeah, I like this. Interesting how we fought there a little bit and then resolved higher. So 4669 would mean basically a test of this high, which I think is totally realistic. And interesting, 877 and 4.669 also align here. So this would be kind of like, whatever the news is that Gensler has at the end of this coming week, they'll pump it up into that event. And it's sort of like a buy the rumor. And then once the event happens, sell the news. That's the end of the rally. So with that kind of backdrop, and who knows where the hell the top is. There's also this fog and bomb. Maybe the top's up here. Could be. So I'm not going to get into the business of calling tops. All I'm going to simply say is, once we do get into trade location, we could probably do some fibs and stuff off the top here. We've got some fog and bombs to work with. Look for your confluence of levels and then start to hunt for signs of divergence. If anything, the fact that Willie is so stupidly overbought here, I hope you're not thinking about going and buying here. This is a horrible place to buy. So, just be warned. If you wanted to be in this thing, you've missed the boat. So, but no divs yet on either volume or price momentum. So just let the thing just keep to work. So, in the face of that, and of course, our weekly chart on Bitcoin, I don't think it's broken. I think we got lots of pause messages. This is now the daily chart. And I've told you guys repeatedly, market rallies into FOMC, then backs off. This happened to be a US government hearing. Market caught a bit of a bid, but actually it was still working its way down. Market rallies into the Fed, then goes nowhere. It backed off a bit, then made high, but then backed off. Market rallies into Fed and then backs off. And then if we go back in time, sometimes market rallies into the Fed and then kaboom on the other side. And this is what I'm sort of worried about. We haven't seen an event like this in a while. I think also too, somebody was telling me that there is some sort of celestial event. Cole probably remind us in the coming week around this time period. I think it's like in the next week or so. There is another one of these crazy ass sort of, I don't know if it's an eclipse or what it is, but there is one of these things coming up here. So just be mindful of that. So as I had said off the weekly chart, that what does 12 weeks of sideways look like on a daily chart? Well, it looks like this. And this, if this resolves bearishly, this is really starting to look like a big honking head and shoulders pattern, which means, number one, if this is actually a head and shoulders pattern, we should not go through this high. So this high right here is key for this whole market structure. And that's 29,380. You should write that down. That's an important number right there. And then also to go on various different exchanges and just see what the confluence of levels is. I said, what did I say? What was the number again? 29,380. So keep an eye out for that number there. 29,380. And I did find it interesting that if we look at this just short-term price pattern, I think you see this more on the 4-hour chart. A to B, C to D, that takes us to 29,053. Oh, interesting, eh? So if this is some sort of big honking head and shoulders, and we're going to rally into the Fed, buy the rumor, sell the news, and it's going to be some sort of, market loves to dump into the end of June. That cripple news would be old news. Maybe Gensler comes out and, tries to pass a law making crypto illegal for all U.S. citizens unless you do exactly what the 1% wants you to do. I don't know. Something along those lines. It looks to me like they want to bid this thing up into that event and then dump it. Off the daily charts, this is actually a setup that we teach in our education program, the 3-step setup. And actually, Grim is the boss for this. But, basically location, indicator confirmation. So location was a 4.669 foggy, also 38.2s off of the bottom here. That previous range, 50% levels off 52-week ranges. So we had location. Indicator confirmation, we actually had a double divergence. And of course, as Brian loves to tell you, love those double Ds. And confirmed breakdown of the divergence. And then finally, we have bearish price structure in the form of big fat M's. So this formation, this chart pattern, this setup, it's been working for a while. Nothing's really changed here at all. I think probably the most important thing here for a guy like me is, as I've said off of this daily chart pattern, and I put tweets out, I cannot get quote unquote bullish of Bitcoin until we actually break through this trend line. Well, that's good. We broke through it. That's encouraging. And then we actually put in a W, down, up, down, breakout, all completely on the other side of this trend line. Or in essence, the market itself is telling us, I'm no longer interested in this trend line. I now have a new uptrend line working with my new bullish market structure, which we don't have. And then this goes back to the weekly price chart and our momentum studies. If we actually put in that bullish price structure, that would force this to W out. And that would force probably W's to come in on things like Willie here. And then maybe W's will come in on OBV here. And then, of course, if we look at the momentum indicators on the daily chart, we can see they're trying to turn up here. Now, I said this earlier, the 3-step setup was predicated on the momentum of the market from over here. But you can see we put in a W over here. So what's our rule? This is the daily chart now. What's our rule about W's and RSI? That's the first W. So this W says, okay, if you're a bear, you better cool your jets. Now we need a second W. So you can see the second W, down, up, down. And now if we break out that second W, that will be through the 50 line. That's actually going to be a pretty powerful buy signal. But you can see it's going to take a bit of work, right? We're going to have to put in some W's here. We're going to have to see some bullish price action to really get going on the bull side here. I just don't see it yet. It's trying. Don't get me wrong. It is trying. But we've got one W. And now what I think we have is we're kind of caught, right? Because you've got this trend line on RSI. So that was rejected. And we have the actual support line of RSI here that was also tested. So you can see the market right now is caught between that trend line and that trend line momentum wise. And we're just jogging in between. What worries me, like I said, is you might find that this thing goes up against the bottom of this trend line and this primary trend line and then rolls back over. And we never did W out on the other side of this trend line. We might go up into the FOMC and then dump on the other side of it. That's what I'm kind of thinking ought to happen. So if we go back to that daily chart, that's what this sort of scenario is. And I painted this weeks ago. So you can't say that I just sort of make this shit up as we go. I've had these lines on here for quite a while. I was thinking that we dumped into sort of key support and notice huge tails. So clearly there was some buying interest there. That was off of the weekly moving average tags. We couldn't punch through there. So on the daily chart, we started to carve out this bottom. It is an intra candle bottom, right? Down, up, down. There is a W there, but it's not on the other side of the trend line. And the scary part about that W is if I change this to a clothesline, poof, all of a sudden our W disappears. So there is no W there. So it's kind of one of these iffy W's. Notice this is a higher low than that high there. So that means if we do go through here, this will be a big honking W. The only problem I have with that is I don't want this W to come in here. I want the W to come in completely on the other side, right? I'd like to see a rally up, then a pullback, then a breakout. So we've got down, up, down, breakout. That's going to give us our weekly turn. And we've got a W on the other side of the trend line. All right, I can now officially get uber bullish. And if that happens, yeah, I know, blabbing away. What time is it? I still got, yeah. All right. All right. So I'll just simply say that if that happens, right, then we can go A to B, right? And we do our bot setups. So bot setup, we did 33%. We did not go beyond 66. If I can get one low, two lows, three lows, four lows, and two of these lows are on the other side of this trend line, well, now I can start thinking trend continuation setups. So I would take my tool and I will draw it off of that lowest low. I will put on the bot levels and, oh, what a surprise. Notice how the 25 level, the entry level on that trade is basically the top of this market structure. Not really a big surprise. Happens a lot. So if that happens, now I'm saying that's going to take a lot of work. But if that does happen, that's painting 37,000 to the upside. Which is interesting too, because notice we do have a nice little trend line here that would align nicely with that level. And if I'm not mistaken, off the weekly charts, 37 would put us, 61.8 Mountain Man. We'd fill in, so I guess there's no real gaps there, but we've got market structure previous fail levels up in this 32 to 35 area. Notice we have a couple trend lines here. That number right there is 37. Oh, what a surprise. And you know, that is AB equals CD, takes us up into reload short zones, which I would say, you know, from a sort of higher time frame perspective, thinking, you know, usually crypto likes to rally in through the latter part of the summer. You know, the crypto kids, they're all in mom's basement, trading away, having fun. That would actually be appropriate. And you notice off of this entire range, this level right here, I have 38.2. You can see that's sitting right now at about 35, 36,000. So this is like Collins dump chaser zone, 38.2 to 50%. This is what we should expect to have happen. And if you go back and look at 2019, we actually got all the way up into 61.8. So there is our A, B, C, D. This would be a bullish bot. There is the confluence of the trendline resistance. There is Collins dump chaser zone. This is the reload zone of just this range off of this high. Into the summer, I like that as a level. That works for me. The only issue that I have here right now is that I just don't know whether I believe that we are actually going to do all of this. And then once we get to the Fed announcement event, we don't just puke out on the other side of it. What I would say, and what bothers me a little bit, you can kind of see it here right now, is this is a really, really good lesson. Anybody watching this, and if you want to sort of share this with friends, why we don't take trades on trendline breaks. I mean, you can see somebody might have gotten suckered into thinking that was a new bull market, and boom, ouch, that hurts. Right here, all right, this is a double bottom breakout on this trendline break. I'm going to buy here, buying a break of that high, and then the market just ends up walking its way down this trend line. Hey, when I see that happen, it drives you crazy. I get the feeling that we're going to go A, B, C, D. There should be a little bit of a rally window here. And then through that FOMC event, you know, like you saw the headlines that we talked about in the newsletter here, the market is actually going to start talking about, well, maybe the Fed's not going to raise anymore. And if the stock market goes absolutely crazy here, and you know, Bitcoin price and all these tech stocks start going crazy, the Fed, by the time we actually get, because keep in mind that's still like a week and a half away. By the time we actually get there, if the stock market is just booming higher here, the Fed's going to be like, oh, Jesus, yeah, maybe we better cool our jet. I mean, you know what? Let's just raise rates just because things are getting out of control again. So we'll cross that bridge. If anything, next Sunday's show should be a good follow-up to see how that looks. So, you know, based on the breadth, the S&Ps are very strong here. I can understand why people would be reluctant to short Bitcoin right here. It does make sense. I'll finish off this conversation with, you know, it's a trader's life. Like I said, this short setup is working, and if you took this short setup, you got no reason to touch this. Your stop still has to be all the way up top here. Could very easily see a big old counter trend rally that takes a position that's already in the money and actually takes it out of the money, and you'd be underwater. That wouldn't surprise me one bit here. Don't have enough anecdotal evidence to turn bullish yet, but I could very easily see that. And then conversely, you know, if we do puke out, I get permission to move my stop to scratch at the 38.2 of this entire range and 50% of the anticipated range, which right now appears to be right around 25 Gs. I have no idea how this is going to play out, but nobody does. That's a trader's life. And if you really fancy yourself a trader, I used to have an old boss who used to always say, trading is the profession where you are paid to be uncomfortable. All of the reasons here said go short. The levels are already identified. The risk levels are identified. Nothing's changed here. You're just paid to be uncomfortable. And you can see the position's up about $100 right now. It was up a couple $100. Went back to scratch. Now it's sitting up a couple $100 or whatever. And it's just business as usual. There's really nothing to do. So finish off this conversation. What does the lower time? I won't get into 30-minute charts because that just gets crazy. But what does the 4-hour chart look like? Well, interestingly enough, this was sort of the message, the final chart that I like to show you guys here in this offering. Well, medium time frame, let's see. Starting to look like a head and shoulders. We talked about that. Counter trend rallies into RLZ, short zone seems appropriate heading into Fed. I like that thinking. Hearing talk of skip, which may be the catalyst that initiates. Keep in mind, this could be like a $2,000 or $3,000 rally in the corner. And things like Cripple and stuff, they go absolutely apeshit. So over this next week, don't be surprised that it seems logical to me that that's the way this thing goes. Now, one thing I did notice, and it sort of completely cut the wind out of crypto sales, was this talk about this hack. So, this is the 3-step setup M that the higher time frames are short off, right? There's that $106 open paper profit right now. Then we talked about last week and the week prior that 1 high, 2 highs, 3 highs. Maybe there's a bearish bot setup that's trend continuation, which would be A to B, C to D, down into here. They went, and keep in mind, last week was a holiday, and they went through the holiday and ran up and cleaned out all of these stops, right? Liquidity pools. And really, that doesn't surprise me, considering it was a holiday session. If anything, take a screenshot of this. Put this in your journal. Put this in your notes. This is what the 1% does. Half of the reason why I think that the Americans have holidays on one day, but the rest of the world has holidays on other days, is so that the 1% can do this. The banksters can. They literally take advantage of these liquidity sort of vacuums. And so that's exactly what I think all of this was. And then notice, and I get the impression this was the big liquidity pool they wanted to go after. But notice that once they've blown out all of these stops, blew out this bearish bot, right? It books a full 100% loss. Boom, boom, boom. In comes a new double top. Just like that, cocksuckers. This is one of the reasons why it's dangerous for like noobs to be trading off of these lower time frames, because the 1% does this all the time. And you could get just like completely frustrated. Hey, I was in this bearish bot and things were working away, and then all of a sudden this rally came out of nowhere, and then literally a minute later the damn market's right back down, and had I just not done anything, I'd still be in the money. Unfortunately, you can't do that. If you trade setups and your stop gets busted, you have to get out because you don't know. This darn thing could have mooned. It's just the way it goes. But so right afterward, bang, 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 in comes the new M top. And I think it was totally manufactured. This whole move, I think, stinks like yesterday's garbage. Then this doesn't have 3 highs, so I can't say it's like a setup that I would like fall in love with, but M's are M's are M's. So did notice that this M did set up off at 25, and all I did was I just took this A, B, C, D, and instead of projecting off of this high, I projected off of this high. Linda Bradford Rashke, she used to always tell me, take 2 shots at an idea. If after the second shot, both of them don't work, maybe just reassess what your whole thesis is. So as we stand right now, I still think that this bearish pattern's working. Notice that they dead cat bounced it up. Then they took it to new lows. Then they took it right back up. And then big old railroad tracks. And this is all around this hack news. That railroad tracks is pretty stiff. And then notice, look at what happened this morning. They rallied it up. This is an empire right now that's potentially forming. That's a shooting star. So now there's a whole bunch of trap bulls in this wick right up top here. And then remember I had said earlier about head and shoulders patterns on the dailies. I think you could make, I mean, it's sloppier than slop, but that is technically head and shoulders a Z. It's not really very pretty. I'm sure Dave would probably argue that with me because it does look like this high is higher than that high. So maybe take that off the table. What I would just simply say is if the market can accept back above this 29,349, then I think the scenarios about higher time frames pushing up and the daily charts pushing up into this coming week, I think they've got legs. Notice too on the daily charts, look how we are just right up against these moving averages. This is a huge battle point. So the market, you can't really get bullish of this until we actually accept above these moving average, beep, market closes, prints a new bar. You actually see the market come back down, and then it turns around and it uses the moving averages as support, and you put in some sort of like lower time frame, like little w down in here, and then the moving averages actually cross bullishly. I don't think we're quite there yet. So as a result, 4-hour, it does look like it's pointing up. And I would not be surprised if I come back from Liam, we find that, boom, they've actually busted through this. And if that's the case, then this, like I said, it kind of looks like a head and shoulders to me. Like there's your neckline, shoulder, head, shoulder. And that would mean if we can, and it's pretty clear-cut levels, 27,350. If we can get up through 27,350, then what that says is we probably ought to jump all the way back right up top to that 28,195. So that's $800 right there. Keep your eyes peeled, folks. Maybe as a slick trader, you can participate in that move. It looks like it's setting up. If, however, we M out here, right, up, down, up, and we fail and we go through those lows, new M, then this bearish bot that's actually technically working right now, it just continues on its merry way. And I would expect that we come back down and test this trend line here, which at that point you'd start locking in your profits on this trade, something like that. All right, thank you, sir. So there's your Bitcoin summary. Woohoo! Party. I mean, my opinion doesn't really mean much, but my opinion here is that they want to take this market higher. Let's see what happens. I was surprised about that hack news yesterday. I kind of took, Saturdays are kind of my day off. So I kind of took the day off after I did some business first thing yesterday morning. And I came back and I was like, wow, that's surprising. I really was not expecting that. They've rallied the market back smartly here. And, they always say wicks and tails like to be eaten. I think you can define our trading range here now. If you see that this wick has been taken out and all these trap bears were not enough to stop whatever the bull push was, and we go up through this level, it's a pretty small window there, right? Then the bull's still fully in charge, and away we go. If, however, we break down, and you could make the argument there's a bunch of trap bears in this tail. You can see how there were trap bears in this tail. Market came down here. It released these trap bears, and they just, they were short on this. And as soon as we got down into those levels, they were like, buy, 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 buy. And of course, price got zipped right back up. So these bears have been released, but now we've got a bunch of these bears. So point here is if you see the market does dip back down into these levels and they get released and then we turn back up, then we got a pretty good looking floor here. I'd say for the time being, it's pretty cut and dry. Trade through 27,350-ish, we'll call it. The bull's driving the bus. Trade back below 26,937. This is stamp. So let's call it 27. If you see a nice solid print below 27, then the bear is fully in charge. And I hate to say it, there's a whole bunch of trapped bears in that tail there. We should really go down and just, at least at the very least, give these guys the opportunity to release themselves. Anyway, we'll see how that goes. So there is your range. And the resolution of both of these levels probably dictates where we go from here. All right, hopefully that was educational or edutational, not quite sure which. The only other thing to really do today is just check in with the AMA. As Chris says, we got about a half an hour here left. Haven't been seeing a lot of questions recently, so hopefully this doesn't take too long. All right, I see GM Demons said MLM and GM Demons likes POND and HEGIC. Oh boy, lots of names. Start at the top of the list. Just quickly go through these. If there is something worth mentioning, we can always circle around and take a good look at it tomorrow. I guess we'll just do the tether. Binance seems to be the popular place. Nice big W there. Brian, he loves his W's. The only issue here was that the rally? It might have been. Fog and bombs. Oh, what a surprise. Look at that, eh? So, if you're brand new to trading, it's going to take you a long time to get used to this. If anything, with regard to this POND, you should probably get into the habit of drawing these chaos levels. I think that's exactly what happened here. Here's also a really good example of these trapped bulls. So, I always say candle body highs for trade location. As soon as they took the market at all into those wicks, whoever the chump was who bought there, they were like, sell, 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 get me the hell out of there. And boom, back down she goes. And the fact that we broke this 1.0 here now, to me, means that this fog and bomb study is done. If we want a new fog and bomb study, we're going to have to see a new W come in and then draw your new levels. So that rally looks to be completed. Then also too, we could just draw simple fibs going back up top. And what a surprise. This is WD GAN. This is like basics TA 101. I learned this, geez, like 30 years ago. I often like to use 50% level as a profit taking objective. So, would this actually be a trade? It's not a terrible idea. I think I would have preferred to try and get in off of this lows down here. But even maybe if you said, well, that looks like a cup and handle, I'm going to buy the breakout there, or, the clothesline breakout. I'll risk to new lows, which is down here. And I'm going to take profits at 50% level. You see how that's 2.33 risk reward. If we just go off of the actual breakout level, 1.82, that's actually not a terrible number. But anywhere in that area, I think that's your trade. So is this trade over? Kind of looks like it, to be honest with you. And if anything, this is the hallmark of a 2019, 2023, 2015 cycle. So what do I mean by that? Back over here. You're going to see this kind of price action and this kind of market behavior, really quick rallies that just disappear, and you better be quick on your toes. You better have your open orders working, blah, 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 in these kind of environments. So 2015 was down in here. It's not really a new bull market yet. It's trying to find a bottom. 2019 was through here. Not really bottomed yet, still well ahead of having an event, but hey, what the hell? This was a 61.8 tag. There was some money to be made there, but not really a runaway bull market. And I think that that's exactly the same kind of market state that we're in now, almost identical. So that doesn't surprise me. And now if you're sitting on this thing now and you say, well, Brian, what do I do? This is like, well, we're standing there. The barn doors are flapping behind us. The horses are running off through the hills. And you're asking me, Brian, should we have closed the barn door last night? The answer obviously is yes. There's not really a hell of a lot I can comment on this. This could potentially be an inside bar failure and a lose of this low right here, which is 886. Could easily imply that A, B, C, D, we're going to go and clean out these lows. So it's kind of a mug's game right now. You're right, basically back at scratch from where you should have bought it. You can take the risk and risk to new lows. And I would say the statistical odds, especially once we get on the other side of this June 14th event, the statistical odds of these things going down and busting to new lows, I think are actually pretty good, which of course you don't want to hear. Sorry. Yeah, I don't have anything momentum wise to say that there's some sort of bottom here yet. So right now, I think, to be honest with you, my simple answer is the trade is over. If you're an investor, little old ladies, gonna buy against the lows, sell against the tops. It's not a bad place to be shopping. Good old reload zones. Brian talks about his big fat fanny, and that is 78.6. I don't mind you going and nibbling off of that level, but if you're gonna do that, then nibbles, nanny nibbles, little old ladies, all that kind of stuff means you got to be able to risk to zero. Maybe you're like, okay, well, I'm not going to risk to zero, but maybe I'll do like Joe's six pack. So I'll risk 50% of my capital. So if I'm going to buy that, what is that, 874, which is that basically that low, then that means I got to risk down to, I hate when it does this, 874. So that's 435, 6, 7, 437. So that's sort of like in this area, right in there. And that means by definition, I'm going to be trying to sell half on a double somewhere up in that area, which makes sense, right? 874 times 2 is 1,700 or so. So there's your trade if you're a little old lady. So sharpshooter, well, you can come in, take that shot. Little old lady, you don't even think about it. You're just like, I love the fundamentals. I'm going to risk to zero, no big deal. And if you're like, well, I'm a Joe six pack, I'm willing to take a shot on this, but I don't want to risk more than 50% of my capital. Well, that's what this trade is here for you now. And actually, because we are back at the 78.6, Brian's big fat fib, that's not a bad level to take a Joe six pack bet off of. So there you go. I hope that helps. Let's maybe you got one more HEGIC. God, I don't know where you guys find these ideas. It's awfully tough if I don't see like a liquid market to do good TA off of. KuCoin probably has some pretty good liquidity. Well, you're definitely coming in, same sort of thing. Little old ladies, Joe six packs. You're coming in down at the bottom end of the ranges. If anything, this is what we like to call the shark setup. So there's the market structure bottom. I don't know whether you want to use that high or that high. It doesn't really matter. There's 78.6. So just coming in and buying that level, that's not a terrible idea. And then, lo and behold, probably got some nice bull divs developing down in here. Yep, nice bull div. Looks good. Solid. Lower lows, higher lows. Willie nice and stupidly oversold. RSI, nice bull divs, Ws. Rising volume pattern. This one doesn't look bad. No idea where you're going to buy this thing. I mean, if you got an account on KuCoin, awesome. I suppose you could also do it in DeFi. I would say one thing I'd like to see here, though, is I'd like to see a W on the other side of this trend line. So there is the primary trend line. Can I get a W? Oh, hello. There's a W. So it's not a bad idea. Actually, I will give this one a much better grade than that last one that you showed me. That is actually not a bad level. And especially off of the original market structure and a BFF level, you're shopping in an interesting neighborhood. Now, just understand that if we do lose this W here, right, where's the floor? Right, if we lose that W, the floor is this trend line. So are you really a little old lady? That's 0.142. And this basically takes us right down to nothing. So 007 right there. That would be Joe's six pack, but that means that they could play around with these lows and still screw with your head. So if you're going to trade this, I think you probably have to just risk this W right here. And of course, this is venture capital. This is crypto, right? Unregulated market. Could they just come along and, hey, I heard that Beamish guy says this is a W and it's okay to buy it, but you got to have your stop working here. All right, fuck you, Beamish. Bang. I've seen it happen at least a dozen times over the past 10 years, me playing this game. So don't be shocked if that happens too. So one of the dangers of playing these little low liquidity names and venture capital, and then some clown like me barking about it on social media, which I think technically this is, means that the people that are running this show, they might say, all right, we got a whole bunch of suckers we can go screw with. Do you want to just maybe wait? Like if you fancy yourself a trader, I might even drill down to a lower time frame, and kind of like what happened here. The W comes in, then wait for the pullback, then another W comes in, then another W. See, look at what they did here, right? So down, up, down, squiggly, squiggly, a little bit more down, then breakout. So I could say, well, it's all right if you had a buy on stop order right there. But looking at it now and saying, all right, yeah, it's okay to go and buy that. I don't know. If anything, what I would say is you probably got to sit and be patient and wait for some sort of consolidation. Give me some sort of W for me to be able to pull the trigger. Because, like I said, these guys could very easily just start emming this thing out. Oh, that Beamish guy's talking on social media. All right, let's just grind them into the dirt here and just work this thing down. So, that can't do anything right there. There's just nothing I can do. Also, too, it kind of looks like there's a bit of a price gap right here. So if you're going to be watching, just sort of like, fine tune pick levels, I think, yep, there you go. Right there. There's an interesting level to keep an eye on. So anyway. All right. Let's I'll look at MLN another day, or if there are no questions on the AMA document, we'll circle back around. Huh? All right. So one question, that's not so bad then. All right, so we'll just put that there. If I was going to be watching for a level to consider it a trade setting up off of, I have a feeling it's right there. And if we do like, oh geez, how high is this high? Oh, what a mess. There to there. Oh, what a surprise. There's Brian's big fat ass right there. So if you want a level to hunt, trade on this thing, it's right down in there. No guarantees from the management, but there's, you asked my 2 cents, there's your 2 cents. Okay, where is that AMA document? Chris over here. There. Oh, no, that's not it. Did you post it in our room? I don't see it. Oh, all right. Thank you. I don't know, guys. Did you get any value out of all this today? Hope you did. Fred asked me to tomorrow in the daily brief after party, but because I'm running out of time here, I only got 10 minutes left till I got to head off for Liam. I hope you guys got some value out of all this. Okay, we did that. I remember that last week. So, hi, Brian. Just wanted your 2 cents on the Australian stonk, Penn Limited APX. Would it be a good idea to take a nibble? Would it be a good idea? That's a loaded question. Probably can't do a lot of fundamental research on this, unfortunately. Oh, interesting. Wow, look at that, eh? Well, obviously something happened here. The problem that I have with this chart is if we go play connect the dots, boom, boom, uh-oh. And then boom, boom, uh-oh. I don't know whether we're done here yet or not. Now, maybe we go boom, 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 1, 2, 3. That doesn't look very megaphony, does it? So coming in on the buy side there, oof, that's tough. But I would probably say, I mean, I think most importantly is we always want to see some anecdotal evidence of bullish market structure. Yeah, this thing has come down an awful long way. So dead cat bounces, probably your dead cat bounce should be just something like 38.2. So that's all the way up there at 17 bucks. I don't know how many shares are out on this thing. I don't know how I would find that out. I don't really have the best source for Australian stock data. I don't, maybe actually it might even be in here. Let's see. Market cap 528 million at 376. Oh, that doesn't sound good. 528 million divided by 3.76 means there's 140 million shares out. I never like a stock with that much stock out. If anything, what I would say is kindly roll the stock back and show me 20 to 30 million shares up. That's what I want to see. Interesting. The technicals are giving a strong buy. Analyst rating giving it a sell. Engage in the development of human annotated data sets for machine learning and artificial intelligence. Operates through the following segments: content relevance, language resources, and other. The content relevant system segment offers annotated data used in search, technology for improving relevance and accuracy of search results. All right. In-car automotive systems and speech-enabled consumer electronics. The company was founded in 1996 and is headquartered in Chatswood, Australia. So I could just simply tell you from the number of shares outstanding, I wouldn't like it. I would like to see a weekly double bottom. What do I mean by that? Actually, well, there's a couple. I think this Intel just put in. Look at that. So I want to see this kind of action. Mind you, that might be a little bit lower. No, actually, no, I don't know. That's a tough one. No, that's a double bottom, yeah. So I would absolutely love to see this kind of action. I love this stock right now. I can't believe I have my fucking bid working right there. Look how much they missed me. That's frustrating. God damn. So weekly W's, right? Then actually I'll show you another one. Same damn thing. Fucking zig when you should have zagged. Look at those W's. Oh my goodness. Look at that W there. Oh my goodness, you son of a bitch. And of course, Brian had his bid like literally 5 cents lower than this goddamn number. I can even show you, I still have the order working. Oh my God. Drive you crazy. Look at that damn reversal bar. So anyway, weekly W's. I mean, this one I should probably just go and place a bid to buy it. Just get long this damn thing. So, and actually interesting, site people are even saying, people are getting super excited about this hydrogen engine. So back to your story. There's, for example, 2 weekly W's that I want to buy. Then, of course, remember I started off and I showed you in the newsletter, why did Brian buy this XLC big fat weekly W? That's what I want to see. So you're asking my opinion. It's not like, I mean, I don't have a crystal ball, APX. I wish I did. Used to have it, broke it. So I'm flying blind right now. I don't see any weekly W's here yet. And if anything, remember we had just said on that Schultz coin, this actually is a trade setup that actually the guy who won the World Series of Trading Championship, he won it like 3 years in a row for day trading. 3 years in a row. And he traded this one setup. Does anybody know what we call this one setup? Not even going to give you the name, not going to even tell you anything. Just what is the name of that setup? Oh, what is the name of that setup? Nobody? It's too bad, actually. The guy's in heaven now. At least I think he's in heaven. He should be in heaven. I don't see why he wouldn't be. Actually died of cancer. Poor guy. Actually, I got another. Starts with a J. Yeah, it is a doji gap. It is a gap and go. Thank you, Norway and Adam. We used to have a guy on the site, Joby. Sweet, sweet man. Sure miss you, Joby. Anyway, he really, really liked this setup. And, the guy who won the World Series of Champions, he calls it doji gap. So hopefully you see the doji, the gap higher. Theoretically, if the market opens up and trades through that high, and of course, I think this is AI related, isn't it? So the space. We trade up through that high there, 386. That's a buy signal. You got to have big, hairy balls for this one, though. This isn't the kind of trading I like to do. Ironically enough, what I would actually do is I would say, I don't know where the top of this is, and it might be here. We might, because this is a megaphone, right? We might just actually carve out like an inside bar here. And then, of course, you all know my favorite fib, right? Brian's big fat ass. 78.6, right? So I would want to place my bid. And, oh, gee whiz, look at that. There's a price gap right there. So I'd want to place my bid at 2.5, 245. Candle body lows for trade location, that would be just a sick level, 224. So the value guy that wants to see a W here, and keep in mind, we still, well, actually, no, maybe I stand correct. No, we just broke it here. Yeah, sorry. So that's where you have to go off of. If this is just a pure momentum play and we go up through this high, great. You can play it just purely on momentum. Just understand that if we pop up through the top here, if we actually give that level back, don't fall in love with this thing because it could come right back down. There's no weekly W here. This is a Joby gap. It's a short-term momentum push. Given the insanity of people about AI recently, it doesn't surprise me that this is setting up this way, but it is nothing more than a short-term momentum play. And the price objective, for whatever it's worth, is this is like somebody else said in YouTube, gap and go. This is the way you measure it, right? You take the distance of the gap to the top of think of that as an AB, and then you're just going to clone that off of the top. So CD. So if you are going to play this, the target would be like 5 1/3, somewhere in that area. But any sign of weakness here, don't fall in love with this thing. Maybe what I might suggest is let this thing open up, let it breathe a little bit, see if you can paint a bot setup, right? So A to B, C to D, and you're going to bot your way through this. And then 50% move, stop to scratch, 66 trail, take profits at 100%, blah, blah, blah. Would I be interested in taking this? Well, if I was like super active, on the go, ready, willing, and able, I have all the symbols, everything on my interactive brokers account all lined up, everything firing, and I'm just chomping at the bit to take this. And of course, I was trading the Australian market, the lots and lots of ifs here. then what the hell? I might give it a swing. But I don't know how advanced of a trader you are. Can you actually handle the anxiety? Maybe this is something like I got to drill down to a daily chart and I got to let some sort of pattern develop here. Or I'm just going to take this, and if it, if it, I don't think it's a good idea to chase. This thing gaps higher up here. Don't chase it. This is definitely high octane, right? This is, hey, I won the World Series of Champions of Trading Poker or whatever tournament. I'm a badass trader. This is not, hey, I'm going to take Brian's level 1 course and learn how to build a small business of trading and get my feet wet in this investing world. Definitely not. This is high octane shit. So, as I said, I'm going to take it slowly. I'm going to learn how to trade, build my trading plan, and set up. I would prefer that you wait for the market to come back down in here and put in a nice W. That's the chicken shit guy. So there you go. All right. I hope that helps answer that question. I'm going to say aggressive trade, Joby Gap. Oops. And you got to know all the rules around Joby Gap trading. Let's say chicken poop, Brian. Value, right? Value. Chicken, Brian. Hunt, W in RLZ. And then, as I had said earlier, fundamentally, with what did we say? 140 million shares out. This is not value. So with 140 million shares outstanding, this is not a value trade. All right, so there is my answer to your question. And we'll put that up there. And what time is it? Oh, look at that, right on 1 o'clock. All right, so I think we'll leave it at that for today's offering. Hope you guys feel like you're getting some value out of all this. Hopefully I've given you a nice rundown of what I'm seeing happening in the broader market. Whoops, that's not what I wanted. And feel free to sign up for the newsletter, which I think it's a good sort of piece that goes with this rant. So at least you can put the rant into context. And everything's linkable here. If you want to get this in your emails, just in case you missed the broadcast, and you get a nice little notice in your email. I'm not quite sure how this. Let's see if I go here. For now, this is like an opt-in service. And Chris has put the TRI's BCS Newsletter sign-up link. He's put it right here as a tiny URL. So you can get that. Notice it works pretty nicely. So anyway. Okay, I think I'll leave it at that. I'll circle around the other daily brief requests we'll do tomorrow in the after party. Also, tomorrow in the after party, we will go through and we will digest recent crypto signals and also trade setup signals that the system, my preferred signaling system, is generated, and also take a look at the leaderboard, see who it is that we should be excited about. Litecoin, of course, having a halving event coming up here pretty soon, so it makes sense why he's relatively strong. We talked a little bit about Cripple and his progress. Actually, SOL, we talked a little bit about, well, actually we didn't, but Colin and his crew, they're doing a ton of development on the SOL platform. So we can circle around, talk a little bit about what are some names that are actually got fundamental events going and who's driving the bus here. But as we had said earlier, that's more value added. This is a subscription service, so don't really want to talk too much about that in the free broadcast. All right. Have yourselves a fantastic rest of your day. Wish me luck on the road with Liam. As always, your positive thoughts, your positive karma, I think does actually translate into our afternoon experience. So appreciate all those best wishes. I think I've said everything I need to say here. PMA for the win. All the best. Hugs and kisses. And the only thing left Brian to say at this point is bye for now.